Hello traders, this is Forensic Forex with Deontay. In this video, I will cover buy ideas utilizing the Asian range. Simple approach to buying. Leave the indicators alone. A buyer in trading refers to an entity or individuals that purchases financial instruments, commodities, or assets with the intention of holding them for appreciation for profits. In this video, I will cover how I approach buying with two simple methods. Stay tuned. Methodology. The Asian session typically exhibits a characteristic pattern of consolidation. During this time, market orders are accumulating, which builds market sentiment. There are two scenarios. Scenario one, which is the ideal scenario, buy when price runs below the Asian low. You're looking for a reversal. Scenario two, buy when price runs above the Asian session high. You're looking for a breakout continuation. On the left, we have a little depiction. We'll get into it. We got the Asian session high, the Asian session low. We have the actual Asian session range, which is market sentiment. There's buy stop orders and sell stop orders accumulating, right? You're building in that sentiment. People are going to speculate going into that next true day open at midnight opening price. Are we going up for the day or are we going down for the day? That's what people are speculating after the Asian session range. If you are a buyer, you're going into this day as a buyer. These are the two scenarios I would use. Let's take a look at scenario one. Like we said, scenario one is buying when price runs below the Asian session low. We're looking for a reversal. That's simply what we're looking for. I want price to draw traders into shorts while I play counter trade to that. So I want to be buying while they're going short. So they're going to sell the shorts to me. I'll buy it at a cheaper price, right? And that's why it's ideal for this scenario. Scenario one is you getting the best buy possible by getting below the fair value range of the starting day. So you'll see as you talk about that in some of the examples. So you are looking to buy below the true day's opening price because you're buying below the Asian session low. And what I would do is try to aim back up for buy side. I'm aiming for the counterparty liquidity pool. Right. So what's left after taking out the sell side? We have buy side. So we're looking for those longs in that direction. Now, price could continue trending in that direction on the higher time frame basis and trend on for a couple of days, even possibly weeks if you catch a real pivotal moment. But for the day, you're just simply looking for a certain standard deviation of that Asian range. You're looking for either one or two or three standard deviations up, depending on that news that day. And we're setting our stop loss to a, maybe a 30 to 40 pip stop loss, depending on the asset or the pair that we're looking at. And that's how I would go about it. So let's take a look at a recent example and a trade that I took on gold. Looking at gold versus US dollar. This is November 25th, that Asian session range that night. And we can see going into Tuesday, essentially. Let's play it forward one candle. We're on the 15-minute chart. We have our Asian session high, our Asian session low. We have IPTO true day open at 12 a.m. So this is our fair value line. It's not a premium. It's not a discount. It's just fair value. It's the opening bid or the starting bid to true day. Anything above it's now a premium, and anything below it is now a discount. So ideally speaking, buying below 12 a.m. is a better buy than buying above 12 a.m. It doesn't make sense buying in a premium, right? Think about that. The game for a buyer is to buy low, buy cheap, buy at discount. And if we could get it below the Asian session low, that's even great. So let's play it forward. So we have our buy side liquidity pool here and our sell side liquidity pool here. We're mainly just talking about the Asian session low and Asian session high. There's other liquidity pools there as well, right? There's a swing high here. There was a swing low here that was taken out at midnight, but we're mainly talking about the range, this high and this low. Let's play it forward, and we can see bang right there. Price takes out the sell side liquidity pool. So at this point, this is where we're looking to go long. We could be going long with a buy stop order. So we would be buying on weakness, so price dropping down while the retail traders are looking for what? Probably a breakout, retest, and go short for the day. Now, it all depends on what you're speculating going into the day. Now, of course, in this example, in this video, we're talking about going into the day as a buyer and how you should approach it utilizing the Asian session range. If you ever get an opportunity where price drops below the Asian session range, you should be looking for longs. Now, for this example and the trade that I took a trade in London, and you guys saw that in the chat. I briefed you on that. So if you are familiar with the London model by me. Take a look at that. We have a video on it explaining it in a little more detail. But simply buying below the Asian session low is a great opportunity. It's ideal. So we will look to go long here. This is where we look to go long. So as price hits that, we look to go long. Now, this is a very lazy trader's approach. It's very simplistic. And we're looking for a one-to-one scenario. Since this is gold, I'll be looking for $15 move up or down. That's all I'm looking for. So a $15 move. And if you want to see that as well, you can measure that out. About $15. There you go. And we're looking for price to go revert back up to counterparty liquidity pool. So this would become our target now. We want to see price run that high out because that is what is left in the marketplace. So let's see what happens as we play it forward. London session comes around again during that time period. That's when I was really looking for a long, but this video is for a very simplistic trade idea. For those traders that just don't have the time, you can set it and forget it, hold for the rest of the day, come back and see if you won the trade or not. Right? We can control our risks. We cannot control the price action. So every day your speculation may not be correct. Understand that. And we can see we get back up to the Asian session high. So we reached our target. So you can take partials, or your TP would be the exact Asian session high. Or again, you could be looking for standard deviations, right? Let's say the Asian session range is really tight and you're looking for deviations of that. You could probably be looking for one standard deviation, right? Two, three, and so on and so forth. So let's play it forward just to see what happens. The New York session comes out. And you can see we run up almost pretty close to one standard deviation before London close at 10. Play it a little further. And you can see we hit that one standard deviation of the Asia session range going into the next day, going into Wednesday. So this long idea was very great. At a time, too, if you're following the daily tracking videos for November, you know why we would have went long here. But all in all, again, look at where we're going long. Below the Asian low. Yes, there was some drawdown. We know that. That's why we use a stop loss for a reason. There's a basket of risk. There's a pool of risk that we are willing to adhere and give leadway to the market and allow us to be in a loss for then some profit, right? Or future profit and price return those profits going into the New York session. So that's how I would use scenario one for a buy idea. Run the Asian session low, revert back to the Asian session high. Let's take a look at another example. So let's just look at for like GU per se. Take a look at GU here on this day. Yes, it is hindsight, but if we take a look at the sequence, look at how it runs to Asian session low and then it runs back up to the Asian session high. So it reverted after running the Asian low. So for this day, did we have our market accumulation, market sentiment being built in? We have the Asian high, we'll put that in red, and then we have the Asian low, we'll put that in blue. This is the opening price for the day. If the true day open, that's 12 a.m. So if we're looking for that long, it would have to form most definitely below 12 a.m. and ideally below the Asian low. Let's play it forward. You can see right there, we look to go long on that break, on that candle right here at 1 a.m. It would have been triggered because we would have already preset, right? We would have waited all the way to midnight, put in the order at this Asian session low to go long for a one-to-one scenario. Let's say since it's GU, we're doing 15 pips, right? We're only looking for 15 pips. But since it's a breakout kind of idea or a reversal kind of idea, London session does have that protractionary phase that can pull us down one or two standard deviations of the Asian session range, or even three at times. You can go for a 30 pip stop loss. So let's say 30 for 30. Something along the lines like this. If you want less, you go for 20 for 20. But I do think anywhere, the lowest I would go is 15 for 15. The highest I would go is 35 for 35. And press play. And you can see how within that day, this lazy trader's approach is very simplistic. You would have been able to get something out of the market, set it and forget it. Or if you're a day trader that can actually sit here and watch it throughout the time, it's really nice to study it. But you come in with that speculation, you take that simple approach, buying the Asian session low, buying below 12 a.m.'s opening price, and you're looking for the counterparty liquidity pool to be returned to or reverted back to. It would be the Asian session high. You can see it does it during London too. And then New York gives a little more. Let's take a look at another example. So let's do UJ. All right, let's look at a yen cross. We have a great example here of it, and most people that have studied ICT's material, you know what this looks like. AMD, accumulation, manipulation, distribution. May not look the same like this every single day, might look a little different, but that is the sense of what's happening in this buy profile here for the day. So price was accumulating, the orders, creating that market sentiment. People were speculating the following day whether or not the market's going to close up or down, or just give some type of gyration or movement to the upside to be profitable or to the downside to be profitable, whether they're a buyer or a seller. But if you are going into this day, again, this is a buyer's video, right? We're utilizing the Asian session range for buy scenarios. If we are looking at this, again, that's 12 a.m. This is the Asian low. That means we want to buy once price breaks that low. That is that ideal scenario we're looking for. And if it breaks that low, we want that revert back up to that buy side liquidity pool. So again, there's money up here and there's money down here. And put it on this side. We're waiting for one side to be broken. But if we're concerned for the buys and we're waiting for scenario one, we're waiting for that long and we'll place that order, right? The order would already be sitting there pending. All right, let's say we go for that 30 for 30. All right, looking for 30 pips to the upside. Yep, as you can see, showing it on the measuring tool. And we play it forward. And we can see we get the 30 pips and price reverts right back up there. So it took out sell side. And then it took out. This became our target. And it finally got there and took it out. So you got a little more than what you were asking for UJ in this example. Now, not all examples are perfect. There are going to be times where price does break the Asian session low and continues to fall, which would mean what? The sellers for that day with that speculation would have won. You would have been the loser. Again, the only thing that we can really control at the end of the day is how we break down the markets fundamentally, technically, right? Our full analysis into market analysis and looking at our macros, looking at what day of the week it is, small range, large range, all these other nuances that we can use to help better gauge whether or not the market's going to go up for the day or down for the day. We use those tools and we go in there and we risk properly. That's what we can control. We can't control the price action. I want you to understand this clearly as the viewer, as the student, as the listener. Please understand, not everything is 100%. You could go in with these ideas and your speculation can be incorrect, and the market's going to provide a win for another trader, and you'll be granted that loss. And it's okay. It's okay. Let's move on to scenario number two. Scenario two, like we said before, buy when price runs above the Asian session high. We're looking for a breakout continuation. So this is not the ideal scenario because we're buying above, and you'll see midnight opening price. We're buying in a premium actually. Now, this, in my opinion, is not the one I would prefer, but at times you will see this scenario unfold and you can take the shot and you would take the calculated risk. But what is happening is price is protecting the sell side liquidity pool. So the Asian session low is going to be staying intact. There's not going to be a rate on it. Price action wants to actually find higher liquidity pools, right? Mainly buy side liquidity pools, clean highs, swing highs, and is going to leave the clean lows alone and the swing lows alone and continue to push price higher. So at this point, we're looking to buy with a buy stop order. You could, right? Or if you're a trader that is available to sit here live and watch it get up to the Asian session high and buy when you want to buy there, you can as well. Or like I said before, you can use the London model or you can use the New York model as well. We have that all in the channel. Now, what you're looking for is price to break out and continue higher. At least give us 1 or 2 standard deviations, or possibly 3, depending on the news, of the Asian session range. And we don't want price to return back down to the Asian session low. And that's mainly where our stop loss would be located, depending on the asset pair that we're trading. So let's take a look at a scenario. Okay, so let's say we're going into this day, and this day is Tuesday night going into Wednesday. So this is Tuesday's Asian session on November 26th. This is simply the next day after that first gold buy example I was showing you, buying below the Asian session low. You see it's right behind us, right there. Let's say we're still a buyer, right? And we see price break the Asian session high. That would mean we would like to see price continue and respect the Asian session low and not run back down to sell side liquidity pool. So that means we're buying above, you see, 12 a.m., the opening price, true day open. So we look to place a buy stop here, buying on strength, and we'll go for that 1-to-1 scenario with gold. I tend to do $15, so we'll go with that. You can see most likely it would be enough, in this scenario at least, it was enough to get us right by the Asian session low. So if price were to get to the Asian session low, get me out of this trade, right? Price is most likely probably going to continue that way, or it's a seeking the short day. Price is just running both sides, and it's a toss up. So let's play it forward. We can see here. So at that point, we would be long on this candle here. Long. We don't want price to come back down here. Now you can see why this is not the ideal buy condition for buyers, because you're buying above 12 a.m. Although our sentiment is higher price action, we can be permitted to buy in a premium, right? If our analysis is correct, though, that means we can still take a calculated risk and be a part of this day, even if price does not give us the ideal buy condition that we want. Now, some people may use their discretion and say, I rather opt out for scenario 1, which is cool as well. But if you're a trader that wants to have dual functioning and want to be on both sides of the coin, you can use this as well and utilize and calculate the risk properly and take the chance. And we can see this is a 1-to-1. If we were to measure out the standard deviation, 1 standard deviation of that exceeds it. So that's nice. We like that. Let's play it forward. Going into London, you can see price trades up. New York session news, we hit the TP, we get that 1 standard deviation. We're not looking for $100 move in gold, $200 move in gold, $1,000 move in gold, or 100 pips in UJ. Right? Day trading, we're looking for anywhere from 20 to 30 pips. Scalp, some people would say 15 pips, but I'm not here to debate. I'm just here to teach you buying scenarios. This is one buy scenario. Doesn't take much. It's a very simple approach. You're buying on the breakout on that Asian session high. Again, that would mean that sell side liquidity pool here at that Asian low is going to be protected. The market is less likely to come back down here and want to raid that. Instead, price raids that there, that buy side, but then also still has something higher than that, right? Whether it's a previous kill zones high or it's some type of PD array, whatever it is they're trying to fill in, a clean high, price is going to draw for that and reach that objective. And you can see it does that here, according to at least this way of measuring objectively. And I think it's just a very simple standard procedure, right? If you're going in long today, how would you do it? Break out above the Asian session high? Absolutely. If it's going to retest it, you buy there as well. You could get fancy with some of these ideas, of course. You could layer in other ideas and methodologies, but I'm here to bring simplicity to the trading community. That's what I think my sole purpose is. when it comes to trading. Bring something that people can actually digest and understand, go into the market and utilize day in, day out, and try to find some consistent model with some type of risk protocol. Let's take a look at some other examples. So let's just take a look at, let's see, New Zealand dollar versus US dollar. Though the Asian session was very lengthy at the beginning, if we take it again, face value, it is hindsight. I know, I understand. Thank you guys. I appreciate it. That Asian low is never returned to. And those breakout traders that were looking for that breakout or was a buyer by sentiment, right? Their sentiment was that this day is going to go higher. They're looking for that breakout above the Asian session high or the reversal to the Asian session low as well. They didn't get that reversal condition. Instead, they got the breakout first. So they're going long. So what would you do? You go long with that buy stop, going long on strength. This is a major pair, not one of the more popular majors, of course, like GU, AU, NU, UCAD, UJ. We'll put in, right, 30 pips. That's what we look for. Again, this Asian session was a little more extensive to have a stop loss down here, more than 50 plus pips. So the 30 pip one was good enough. Let me hold. And you can see how it really respects that Asian session high objectively too on that breakout. It tests it and tries to push higher. There are moments in times too, though, right? Price comes up here, retests it, looks like it's gonna go higher, and then fades. It comes down here and stops you out. Whether your stop loss was a little higher or was just like the other gold idea. Let's go back to gold. Just like this gold idea here, the same thing could have happened. Price could have broke up, retest, and then fell all the way through and hit the stop loss and run the Asian session. At that point, maybe price is going to continue going lower. I'm not interested in that. I'm done. You got to have limitations to how many times you're going to trade during the day, how much you're willing to risk, what's your daily risk, right? What's the max risk you can lose in that day? Are you risking 2% per day? Are you risking 1%? You're risking a 0.5%. Those are things you can calculate and do on your own, right? Do your own due diligence. But here, just showing you simple ideas how to go long in the market. That was gold. That was NU. Let's take a look at one more idea. Let's look at, I don't know, U Swissy. Got a nice idea here. Look at this. Same thing. We don't have to write it out all out on the chart, but you can see how price, hypothetically speaking, if you did your technical, your fundamental, your macros, you did all the other nuances that you have to do, your checks and balances for the day. If you were looking to go into this day with the buyer's hat on your head, you're not a seller today. You threw the seller's hat back in the closet. You picked up the buyer's hat, put it on your head. You said, today, Wednesday, November 20th, 2024, I'm looking to be a buyer. And one of the scenarios of me buying is either breakout of the Asian session high or reversal of the Asian session low. Now, whichever one comes first, I'm going to take. That's how I like to personally gauge it as well. So you can see price gets there. That's where you're looking for that breakout long, that Asian session high. Use Swissy. So say we go for that 30 pip idea. And we're looking for higher price action. That's it. That's all we're simply looking for. And we're looking for price to go up. Get us up somewhere. Does price hit the final TP? I have no idea. Let's see if it does. What a roller coaster, though. Right? Still got up there. Didn't hit the stop loss that we were intended to, but it did run that Asian session low. So it was going into another trading day. But from this day on, this was not a bad price point to buy at. Neither were these as well. But going off of what we did originally on this day, hypothetically, we would have been holding long, and it seemed to be very dynamic, right? Hopefully, you can agree that this was a dynamic strategy for the day. I like simple things. I've been trading for a while now. I like to keep it very quick and concise. I don't want to do a lot of thinking. I want to be able to trade, go about my day, get to work, finish other things I got to do, and have a good time. I don't want trading to be stressful. So hopefully you found this insightful. Let's wrap up the video. Some key takeaways from today's video. Buy in a discount if presented. Stick to what you prefer. You cannot win them all. And at the end, I want to leave you guys off with a quote from Dave Chappelle. And it goes like this. I'm cool with failing, so long as I know that there are people around me that love me unconditionally. Dave Chappelle. Peace. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoyed this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.